Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring, and today is Saturday, January 28th, 2023. Thank you so much for stopping by and for watching my weekend review podcast. Hope you had a great week. Market was up. That's all good. And in the podcast today, let me tell you what the format's going to be. First of all, we are going to run the U.S. legal disclaimer. Secondly, we're going to come back and we are going to take a look at all the trades that I made in the last week. We're going to look up, we're going to look at each one. We're going to talk about when I bought them, why I bought them, and more importantly, and most importantly, how I'm going to manage the trade going forward. I like to trade on the weekly time frames. I like to trade on the daily time frames. I like to trade as many different time frames as I can. I think it helps balance out and smooth out your equity curve. And so we'll go through all the trades. Take a look at all that. After that, we're going to talk a little bit about trader psychology and the importance of that. Most important skill in trading really is the ability to create a plan, follow that plan that you laid out before you got in the trade, and follow it to the letter, follow it to the T, and without letting gains or losses upset you, without letting it amplify your emotions, and just sticking with the process that you laid out. And after that, we're going to talk. We're going to do a poem from my good friend Frank, the trading poet. Always like to touch on that. He always has some good information and some good thoughts about trading in each poem. And so we'll do that. And then after that, I have gone down through my master watch list, both on the daily time frames and the weekly time frames. And we will go through the ones that I have identified for potential trades for next week, both on the daily and the weekly time frame. We've had quite a big rally, so there are not a lot of positions that give a good risk to reward ratio to the long side, but there are starting to be some good short side potentials. Doesn't mean they're going to work, but good levels as far to plan the trade around with good risk to reward ratios. So I will take you through all of those as well. Okay, so first of all, I have to run the U.S. legal disclaimer. I will be back in about 40 seconds. Thank you.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
Alrighty, thanks for holding through that with me, and let's get to current trades. These are going to be on the daily. All right, so we have had a big rally, kind of came out of nowhere. Not sure why that happened, but glad that it did. Things were looking pretty dire a few weeks ago, but a lot of times when they seem the most dire, that's a good opportunity to get in. Always best to just follow your signals, as I mentioned at the beginning of the show. Just follow the signals, and that's what you need to do. All right, so let's get started with Apple. I did buy Apple back on the 29th of December 2022 with the simple under 30, over 30, under the negative third channel, over the negative third channel. This is what's called a deep dip buy. And one of my favorite strategies is the deep dip buy strategy. And this one was just an under 30 RSI. You can see it's also under the negative third ATR channel, and then a pop back over, close back over. Now, whenever I enter a trade, first thing I do is I have to position size based upon the current market volatility. How do you do that? Well, the strategy that I use, which has worked out very, very well, is I take 1% of my total capital. That's my maximum allowed risk. So if I have a $100,000 account, 1% of that is $1,000. If you have a $2,000 account, 1% would be 2,000, or $200,000 account, 1% would be 2,000. But let's just use a hypothetical $100,000 account. 1% of that is $1,000. I take $1,000, I divide it by the value of the 2 ATR at the time that I take the trade. Right now it's 733. It was different back when I took the trade. But whenever you take the trade, you take that 1% divided by the value of the 2 ATR. In this case, right now it's 733, divided by 733. That tells you to buy 136.4 shares. Can't buy a fraction of a share, so I just round down to 136. So that's how many shares that I buy. Then, next thing I have to do is I have to place my emergency stop. Well, my emergency stop is always going to be the value of that 2 ATR, 733. So if I bought here with, let's see, $1,000 divided by 733, 136 shares. If I buy 136 shares here, and it goes down $7.33, well, there's my $1,000. Now, at the end of the day, that's when I made my buying and selling decisions, whether I'm getting in, whether I'm getting out. But this emergency stop down here, I don't wait for the end of the day. So if I bought here, which I did at 129.50, and then it moves $7.33 to the downside, well, there's the $1,000. And if it ever hits that, I get out immediately. That's my emergency stop. Now, my end of day stop on a deep dip buy is, why did I take the trade? Well, I took the trade because it was an under 30, over 30. So if it then in the future closed under 30 RSI, I would just get out, but it did not. It held the 30, which is a support level. It held the 30, and now it has moved up nicely. Now, I did get out of half of my trade here on the 12th of January because it went over 50 RSI during the day and then closed back under. That's a signal, that's a red flag that 50 RSI was acting as resistance. So I went ahead and I got out of half my position here at 133.40. Now, the orange line here is 1.5 ATRs above my entry. Once I get there, I get into trailing stop mode. And if I get into trailing stop mode, all that means is then in the future, if I have a close below a previous bar's low, then I get out of the trade. Well, that has not happened. It has just moved up very, very, very strongly. We're at a 67.92 RSI. Now, it was higher during the day. Let's take a look and actually see exactly where it was. 69.22. It almost got to a 70 RSI. Had it got to a 70 RSI and then closed back below it, intraday rejection, or in the future, if it goes above 70 and then closes below 70, then that will be my signal to get out of another half of whatever I have remaining. So, there's a lot of rules here that I have, different rules for different strategies. In this podcast, I try to do my best to just go through this and show you what my rules are. But, if you would like to really learn to trade like I do teach private one-on-one lessons in the evening time. I love to teach. I've taught students from all over the world. I have a great course. It's a total of 15 hours, one-on-one instruction, just you and I. And in that, I go through all of the different strategies. I go through all of the different rules, step by step. It's very important to me that my students succeed in trading. So in this podcast, I'm just going to show you what the rules are. But if you would really, really like to learn these rules and just internalize them, know them, take the one-on-one course with me. I promise you will be glad that you did, and I'll talk a little bit more about it at the end. But I do have my email in the link of this YouTube video. So if you're interested, just send me an email. We'll talk, and we can schedule the lesson. So anyway, again, under 30, over 30, it was where I bought. I placed my 1.5 ATR level up here. Once I get to it, if I have a close below a previous bar's low, I get out of half. In this case, over 50, under 50 RSI, I got out of half at 133.40, and I have had no reason to get out of the second half of my trade. This particular trade, the second half, from entry to current price, up 11.27%. Pretty good, too. And I might want to add, too, that the emergency stops, the end-of-day stops, these are all defensive moves. But I like to play offensive as well, or play offense as well. And how do I do that? I do that by taking partial profits on the way up. And whenever, I mean, if we look at the current price right now, 145.92, I will take partial profits if it continues up on Monday. And all I do is I take 145.92, which is the closing price. I add the value of the 0.45 to it. It's 165. So I'll take 142.92, add 165 to it. That will be my first profit target on Monday. I'll do that again, take the first profit target, add 0.45 to it. That will be my second. Take my second profit target, add the 0.45 to it again. That will be my third. So as it moves up, as the market gives me something, I go ahead and take a partial profit. I take 10% of whatever I have. So I like to play offense and defense on the trade. So again, under 30, over 30. Position size, place my emergency stop 2 ATR below. Know where my end of day stop is, just to close below the 30 RSI. It never got there. It held. As it moves up, I continue to take partial profits. I had a trailing stop rule here where we rejected the 50 RSI, got out of half here, continued to take partial profits as it moved up. And now at this point, I'm just waiting for some kind of rejection of the 70 RSI, in which case I would take half. And then how do I get out of the second half, the total remaining amount of the position? Just a close below a previous bar's low after rejecting the 70 RSI. Alternatively, here's the 5 EMA. This is kind of a catch-all stop for me, because once I get to a 65 RSI, if I ever then close below the 5 EMA, then I get out of the entire trade. But it's been a wonderful trade. The remaining shares I have here up 11.27%. Tesla. All right, so Tesla, different entry strategy. I did not buy Tesla with a deep dip buy. I bought it with a higher low V1. And again, this is another strategy that I teach in my one-on-one courses. Higher low V1 means that, well, let's take a look at the two green lines here. This is the 1 ATR channel. This is the negative 1 ATR channel. Anywhere in here is considered the value zone. So for a higher low V1, first of all, I need the prices to close underneath the negative 1 ATR channel, which certainly they did in a big way. Then I need them to pop into the value zone like they did here. See how this bar comes in between these two green lines? Then have a pullback and create a V1 or a V2. This is a V1. A V1 consists of two bars, bar 1, bar 2. Bar 2 goes below bar 1's low, closes above bar 1's close. That's my entry signal. I position size by taking my maximum allowed loss, dividing it by the value of the 2 ATR. That tells me how many shares to buy. I place my emergency stop 2 ATRs below. Now, on a V1 or a V2 or higher low V1 or V2, my end of day stop is simply a close below halfway the washout bar. This is this little line here at 120. If it closed below this halfway, that would be my end of day stop, hopefully for a small loss. Well, look, the next day it gapped down, was below, but I wait for the end of the day, because at the end of the day, the large financial institutions come in. I believe they're the smartest money. And so I wait for the end of the day, of course, unless it got to my emergency stop where I would get out. So I got in at 123.37. Next day looked a little precarious, but it did hold and close as it moved up. I took partial profits, took partial profits. Now, I did get out here on the 25th because of earnings. I don't like to hold through earnings. I think it's a big gamble. Obviously, in this case, I wish I would have because it kept going up, but it could have done this to the downside as well. So my trailing stop, all that kind of stuff did not come into play because earnings supersedes all of that. And I simply got out before earnings at 144.80 for a profit of 14.54%. So really, really great trade. And then it just kept on going, but that's how it goes. CCL was to the short side. I really like this setup. I talked about it last week. I did get short on CCL here with the rejection of the 200. Also, it came at about halfway of this big down bar, which is normally a very good place to short. I got short here at 1075. I placed my emergency stop above. My end of day stop was simply a close over the 200. Next day, came down, went down. Luckily, took a little profits there. Glad for that. But the next day closed back above. That was my end of day stop. I had to adhere to it, and I'm glad I did. took a small loss on this trade for minus 1.29%. And then SPY also took a shot at shorting SPY here. It's really same kind of approach where we have this big down bar, had a rally back in, rejected the 200, got short here at 395.70, and the next day it was just too strong, closed above the 200 day, got out again for a small loss of 1.31%. And got out, then it came down. I was like, oh shoot, and then it went higher. So I'm glad that I did. But always follow your stops. It's never fun to take a loss, but taking small losses in trading is allowed. And you saw some of the other trades, had a 1.5% loss, 1.29% loss. That's okay. But throw in some 9% gains, some 14% gains, and that's how you make money in trading. Small losses, small gains, break-even trades, and large losses. You just can't have large losses. All right, so that was SPY. So those are the dailies. Let's get on to the weeklies. Weekly, I did buy Alphabet or Google, deep dip buy strategy with a weekly trade. Weekly trades end on Friday. That's the end of a Friday bar. I got long Google here, 88.90. I position sized as normal. I placed my emergency stop 2 ATRs below. My end of week stop would simply have been a close below the 250. It went below, closed above, went below, closed above, went below, closed above. So it tested this 250. It was acting as legitimate support, and then we moved up. As it moves up, of course, I'm taking profits. We have earnings on the 2nd of February. So at that point, I will just go ahead and get out. You can see the orange line here is a 1.5 ATRs from my entry. So now I am in trailing stop level, trailing stop mode. Now, probably won't have any trailing stops because, like I said, earnings is on the 2nd of February. So right before the market closes on the 2nd, I will just go ahead and get out of the trade because I don't want to hold through earnings. This particular trade on the weekly up nicely, up 10.61%. And again, deep dip buy. SSO, another deep dip buy with a close under the 200 week moving average and close back above. Position size, emergency stop, end of week stop would simply be a close below this 200, but it never happened. Next bar went up nicely, took some profits off the table. Next week didn't do anything. This week, of course, big week up, took some more profits off the table. Trailing stop level up here at 52.10. Once I get there, I go into trailing stop mode. And this particular trade at the moment up 8.25%. So pretty nice. IWM, another weekly trade. It's been in this one for quite a long time. Got in this all the way back on 10/14 of 22. What was the signal? The signal was a rejection of the 300 with a very good risk reward ratio. Entered, position size, emergency stop, end of week stop, simply a close below the 300. Never got there, moved up, took partial profits, moved up, took partial profits. Here I have the ATR, the trailing stop level, which is 1.5 ATRs above. Got there, meaning that if I get a close below a previous bar's low, I get out for half, and I did. I got out of half here at 178.70 for a nice gain. Came back down, looked like we were going to challenge the 300 again, but it held again, moved back up, took some more partial profits, took some more partial profits this week. And this particular trade, entry to exit, based upon the shares that I have left, up 11.74%. So you might be asking, well, Greg, what are you going to do from here? Well, if it keeps moving up, I'll continue to take partial profits. If it gets to a 65 RSI level, then the 5 EMA will come into place. If it continues up and I reject the 70 RSI, I'll get out of half. After I do that, then if I get when I get a close below a previous bar's low, I will get out of the second half. So I know it sounds like a lot of rules, and there are a lot of rules, but in my experience, and I've been trading for 28 years, entries are easy. Your position size, you get in, you know exactly. But how to manage your trade as it moves up, that's the key, in my opinion, to profitable trading. And that's what I teach in my one-on-one courses. So it keeps moving up. continue to take profits. If it gets to 65 RSI level, then if I get a close below the 5 EMA, I'll get out. I'll be looking for a rejection of the 70 RSI. And in the worst case scenario, if it comes back down, closes below that 300, I'll get out. But like I said, this particular trade in the money on the remaining shares up 11.74%. KMX. Okay, here we go. Well, this is not a deep dip buy. This again is a higher low V1. We closed below the -1 ATR channel. We rallied into the value zone. We had a pullback and then a V1. And by the way, if you're interested in V1s, V2s, and you should be because they're very good entry signals, on my YouTube channel, in the playlist section, there is a free video about V1s and V2s. And I also believe it's in the description of this YouTube video too. It's a link. Watch the lesson. It's a great lesson. It's completely free. So V1, bar 1, bar 2. Bar 2 goes below bar 1's low, closes above bar 1's close. I got long at $65. I Position size, I place my emergency stop 2 ATRs below. On a higher low V1, what is my entry or my end of day stop? Well, simply a close below halfway of the washout bar. This was the washout bar the week that I took it here at 65. Oh, sorry, I got long at, I better check that, make sure that's a little close. 65.40, that's right, got long at 65.40. Right now it is 69.11. So been really, really nice trade here, up about 5.44% on the trade. Orange line up here is my trailing stop level. If and when I get to that, then I'll go into trailing stop mode, which simply means once I get to trailing stop, if I have a close below previous bar's low, I will just get out of half. But nice, up 5.44% was a great week for that. And then I have a new trade on WBA, which is Walgreens, and this is a different kind of V1, V2. And again, something I teach in my course. This is a return to value V2. Return to value, we have to have the price close above the 1 ATR channel, which it did, come back into the value zone. I need 2 bars of sideways motion, and then this is a V2. Now, a V2 consists of 3 bars. Bar 1, bar 2, bar 3. Bar 2 goes below bar 1's low, and then bar 3 closes above bar 1's close. So I did get long here, 36.90. My emergency stop down here, my trailing stop is halfway the washout bar, and a V2, the number 2 bar, is the washout bar. That's why the pink line here, if it closes below this next Friday, I will get out of half. If it gets down here at any time next week, I will get out of everything. I place my trailing stop level up here at 40.60. And this particular trade, I didn't measure, but I got in a little, let's see, yeah, up 0.73%, but I just took this on Friday. And then last but not least was Microsoft on the weeklies. A lot of trades on the weeklies. I got into Microsoft all the way back here on the 4th of November. It bounced at the 200. Again, this is a deep dip buy strategy again. Bounced at the 200. Position size, place my emergency stop 2 ATRs below. My end of week stop is simply a close below the 200. Then I place my trailing stop level 1.5 ATRs above. Next week went up beautifully, took some profits off the table with partial profits. Now I'm in trailing stop mode. Moved up, took some more profits. Had a big move up, took 2 profit targets off there. And remember, we got to trailing stop level, and then the bar after that, we have a close below of previous bar's low. Got out of half at 239.50. Then we had that big week down, but it held the 200, so I continued to stay in, moved up, took some more profits off. The next week didn't do much, and then had a nice bar up this week as well. But we had earnings, and I got out of earnings before earnings right here at 242.52 for a profit of 8.59%. So I didn't hold through earnings. It did go up higher, but again, I never hold through earnings. So those are all the trades. Really, really good trades. This market has been amazing in the last couple weeks. Been kind of a short squeeze. Don't know if it's going to continue up. You never know. But again, it's best not to have an opinion. It's best to just follow the price action and your process. All right. As I mentioned, I want to do a little bit about trader psychology. This is from Mark Douglas. Mark Douglas, very famous author, really one of the top people talking about trading psychology. He has a book, Trading in the Zone. I would highly recommend it. Let's see what Mark Douglas has to say today. When you learn how to define an edge and learn how to execute a trade flawlessly, what you're now exposed to is the possibility of unlimited wealth. And really, everyone, that is what it takes in trading. As I mentioned at the beginning of the podcast, you have to define an edge. What is defining an edge? Well, for me, and what I teach is looking for a major support level like a 200 SMA, 250, 300, 30 RSI level, 50 RSI level, and position sizing correctly, entering, having your emergency stop, your risk to reward has to be very close so that if you're wrong the smallest amount possible. And if you're right, having some kind of process of managing your trade to the upside, which I just showed you in my current positions. That's what having an edge is. Buying at support, having a good risk to reward ratio, position sizing correctly, and having a process. Of course, they're not all going to work out. They never do. It'd be fun if they did, but learning, whether you learn it from me or whether you learn someone else's approach, they always have to have a good risk to reward ratio. Entering that trade, pulling the handle on that slot machine, because once you place the trade, you know something's going to happen. And if you're right, having the chance of being right big. If you're wrong, getting out quickly, having the discipline to just get out when you're supposed to, following your rules. But that's what he's talking about. When you learn how to define an edge and learn how to execute a trade flawlessly, what you're now exposed to is the possibility of unlimited wealth. And, that's what casinos do all around the world. They have an edge. They don't win every hand, but they make money over the long run because they trade flawlessly, or in other words, they followed their rules. So if you haven't read Trading in the Zone by Mark Douglas, do yourself a favor and read it. It's one of the best books out there. I believe on YouTube, just put in Trading in the Zone Mark Douglas. You have the whole audiobook there for free. All right, let's get to a poem from Frank, and then we'll take a look at potential trades for next week. Please follow my friend Frank at FrankOD over on Twitter. He writes great poems every day, always pertinent to what's going on in the market. Let's read what he has to say. What is a market but a force? It is made of stocks that must run their course. Traders provide the capital that power its source. A well-made plan is the best way to have no buyer's remorse. So true. A well-made plan is the best way to have no buyer's remorse. And that's what I'm talking about, everyone. You have to have a well-made plan. Position size, buy at support, buy at a level where other buyers come in, having an emergency stop, getting out quickly, and knowing how to manage your trade as it moves up or down. That's it. What is a market but a force? It is made of stocks that must run their course. Traders provide the capital that power its source. A well-made plan is the best way to have no buyer's remorse. Thank you, Frank, and please follow Frank over at FrankOD over on Twitter. All right, everybody. So like I said, I did go down through my master watch list, both on the daily and the weekly timeframes, and I will show you what I've come up with for next week, both daily and weekly. Let's start with the daily. Here is ARK Innovation, ARKK, and ARK has had a tremendous run off the bottom. My gosh. But do I want to get long here? No, I certainly do not. The risk, it's very, very strong, but the risk to reward ratio not so great. So what I'm looking for next week is I'm looking for a short on Amazon, ARK, excuse me. Did I say Amazon? ARK, ARKK. You see the 200 moving average here, the downward sloping 200. Well, this is going to act as some resistance. And I drew a line here at the 200. And if you go back, look, here is the resistance of that previous high. Doesn't mean it can't break through that, but there's two forms of resistance here. There's the previous high, which is inherently, there's going to be some inherent resistance there for sure. And there's the 200-day moving average. I like to buy or short or buy markets that have multiple levels of support or resistance. Well, this is multiple. 200 here, previous high here. Let's take a look at the weekly. I like to look at the larger time frames to also look for additional levels of resistance. Well, the -1 ATR channel here, or I'm sorry, the 1 ATR channel here is also a level. So we're, we've had this big move up. It doesn't mean it cannot keep moving up, but I will take my chances with shorting if I get a rejection of this 200, or either, on Monday, if it goes up, goes above that 200 and then closes back below, I'll get short. Alternatively, if it closes above the 200 and then closes back below the 200, that's also a rejection, then I will get short as well. And if I short, I'll take my maximum allowed loss. I'll divide by the value of the 2 ATR. That will show me how many shares to short. I'll place that emergency stop 2 ATRs below, and then my end of day stop will just simply be a close back above the 200-day moving average. I'll place my 1.5 ATR trailing stop below. This is all different because it's shorting, but it's exactly the same way as I do the long trades, just to the downside. And again, this is the kind of stuff that I teach in my one-on-one classes. So that is what I'm looking for next week on ARK, is rejection of the 200 to get me short. Walt Disney, also a major, look at this move up. It almost seems unreal, doesn't it? Well, exact same thing. I'm looking for rejection of a major support level, which is the 250-day moving average. It didn't touch it on Friday. That's why I did not get short. Interestingly enough, this Walt Disney was down on a day where the market was up. That's called relative strength. So that's why it's also kind of interesting to me. So next week, if we reject the 250-day moving average, I will get short. Position size, place my emergency stop 2 ATR below. My end of day stop will simply be a close above the 250. So I'll be waiting for a rejection of that 250. Microsoft, another potential short position for next week. Of course, I was in Microsoft, had a really nice trade on it, got out because of earnings. 200-day moving average dovetailing with the third ATR channel. See how they're nesting here together? That is a very good place for a potential short. It doesn't mean it's going to work out, but again, I like to look for multiple levels of resistance when I short. You can see last time shorting off that 200 would have been a very, very, very good trade. Doesn't mean it's going to happen this time. Doesn't even mean it's going to test the 200, but because we have the 200 SMA and the third ATR channel here, I like the multiple levels of resistance. And next week, if we reject the 200, I will get short. So far, only short positions here that I'm pointing out. Last is QLD. QLD is double leveraged Qs for NASDAQ. Same thing. Not going to take a short here just to take a short. I need some kind of level. And the 200 right here is the level that I am looking for. If it rejects the 200, I will simply get out. I will simply take a short position on the Qs. Now, all the four that I showed you that I'm looking for next week are shorts. If they all trigger, it doesn't mean I'm going to take them all. I may take a short on Disney and a short on ARK, but I'm not going to take a short on QLD and ARK because they're in the same industry. So I don't like to have too many trades in the same industry on the same day. But if they both happened, Disney and ARK, I would take it. Disney, Microsoft, I would take it. Disney ProShares, I would take it. But I wouldn't take an ARK and a Microsoft and a ProShares all at the same time. So that's what I'm looking for. A short on ARK next week with the potential rejection of the 200 above. Short on Walt Disney with the potential rejection of the 250. Microsoft, potential rejection of the 200 and the third ATR channel. And QLD, rejection of the 200. So those are the dailies. Let's head over to the weeklies. Okay. I've talked about this one for weeks, just has never got there, but this would also be a short on AGQ. AGQ is double leveraged silver off of the 200. You can see that has really acted as a major level of support. If we reject the 200 here, I would get short. Now, I drew this line at the 200 so that I could take you to the higher time frame here. Well, that pink line, that higher time frame, also dovetails nicely with a lot of uh, uh, resistance levels on the weekly. 50 EMA, 100 SMA. I like to look at multiple time frames. I like to see resistance on multiple. So on the higher time frame, yes, we have a lot of resistance here because of the 50 and the 100 on the monthly. On the weekly, that same level dovetails with the 200 on the weekly. So next Friday, if we have rejected the 200, I will get short ProShares. And the end of week stop would just simply be a close above the 200. Intel. All right. Well, Intel had earnings, did not react very well, was down quite a bit on Friday. This, as I was talking about in my one-on-one mentoring and teaching course that I provide, and I've showed many examples over the last few weeks with these higher low V1s that have just been, I mean, they're one of my favorite positions, higher low V1s or V2s. This Intel is setting up for a potential higher low V2. We close below the -1 ATR channel. We come into the value zone. We pull back. Here's bar one. Bar two goes below bar one, washes it out. That indeed happened. Next week, and only next week, if we close above bar one's close at 29.22, that would create a higher low V2, just like I showed you on some of the signals. Boy, I had such a great trade on GDX. I had a great trade on Tesla, the one that I showed you earlier in the show. But if next week, this is a long position, if next week we close above 29.22 on Intel, that will get me long Intel. Joe, coffee. Well, coffee, this would have been a legitimate trade, deep dip buy with the close under the 200 and close back over the 200. I didn't take this because the risk to reward ratio is not so great. Because if I buy here, my end of week stop, it's going to be a close below the 200. It's a little too much. I like to get it a little bit closer to give me a better risk to reward ratio. Now, this was a big up bar. Halfway of a big up bar should act as some kind of support. Now, again, this would have been legitimate to take this trade on Friday, but I'm just going to let this go. But next week, if we do come down to about halfway of this bar, I will just go ahead and buy because the trade is legitimate trade with the close under the 200. I mean, it would be legitimate for me to buy here, actually. But I'd like to get a better risk to reward ratio. And I believe if the price comes back to about halfway, then it gives me it gives me a lower price and it gives me a much better risk to reward ratio. So next week, during the week, actually any time during the week, this is a little unorthodox, but next week, if we get back to 46.70, I will simply buy this trade. I'll just have a better entry price than I would if I would have bought it on Friday. And then I'll do the same thing. I'll position size, I'll place my emergency stop. My entry will be closer to the 200 and therefore give me a better risk to reward ratio. And then if I buy it at 46.70, I mean, I literally just put an order in to buy at 46.70. If it gets there, great. I'll buy it and then close below the 200 will be my stop. And then last but not least, UNG. Well, UNG is natural gas. Seems like everything's going up, but natural gas, look, we're at 29.49. Looks very scary to buy here. Like anytime you do an under 30 over 30, it's always scary. I realize that, but you know, how many trades have I showed you over the years where I do buy the under 30 over 30 and then, you know, a couple weeks later it's much, much higher and you're like, why didn't I buy down there? Well, you know, you don't just buy willy-nilly, but you buy if there's a signal. Well, is there a signal yet? No, there's not. It's 29.49 RSI. But if it closes above the 30 RSI next week, that will get me long on UNG. Just a simple close back over the 30 RSI, just like I showed you on Apple. Another thing noteworthy to see here, here's the negative third ATR channel. About 92% of prices stop going down at the negative third ATR channel. Well, this is one of these 8% where it did not. You see, it got to the third, but it's still going down. So it's very, very weak. But we're 29.49 next week. If we close above the 30 RSI, most likely we will then have closed back above the negative third ATR channel too, and I'll have my confluence that I need when I want to take trades, right? Confluences are the best way to take trades, and the confluence would be an under 30 back over 30 and an under the negative third back over third. So just one more time on the weeklies, looking for rejection for a short of the 200 on AGQ. On Intel, looking for a higher low V2 long position if we close above 29.22. JO, just looking to buy if we get back to halfway here. That will be a long position, but I'm waiting for it to come back to half using the 200 as my stop. And then UNG, as we just noticed, if it closes back above 30, that will be my entry. So, those are the trades. As I mentioned, I know it sounds like there's a lot of rules because, I do use 5 different trading approaches. I use deep dip buys. I use higher low V1s, V2s. I use return to value V1s, V2s. I use moving average crossover trades, and I also use double bottoms, bullish divergences. And these are what I teach in my class, in my one-on-one class. And I really believe the best way to learn anything is to learn it one-on-one with your instructor, whether it's tennis or violin or trading. If you really want to learn something, if you want to learn every single part of a trade, at least the way that I trade, then consider taking my course. And the best way to do that, my email is in the link of the description. All you have to do is send me an email and say, Greg, I'm potentially interested in your one-on-one course. Like I said, it's 5 sessions. Each session is 3 hours. It's a serious course, so it's a total of 15 hours. And I love to teach. I've had such good success with my students, and I'm very patient, and I just teach you step by step. Now, the course does cost $1,750, but I promise you it's worth every single penny. And so just email me, say, Greg, potentially interested in taking your course. I will reply and say, great, that sounds great. Let's have a Skype call. The Skype call's free. It's not a sales call. I promise you that. I just want to learn more about you, your trading, your challenges, your goals, and it's a great time for you to ask me any questions about the lesson as well. And then when we're done, that's it. Then if you're interested, you'll have to get back in contact with me. But I hope you do, because you'll be very, very happy that you took this course. Now, if you like online courses, I have a great online course available at udemy.com, and the link is also available in the description. And the deep dip buy strategy is what I teach in that course. And that course has so much information. There's 9.5 hours of video. There's 26 videos total. There are 15 study guides. And the best part, that course only costs between $12 and $15 on Udemy, and it is a great course. I have sold so many of those courses around the world and gotten so much good feedback and 5-star reviews. And if you want to start, that is a great place to start. And even if you take my one-on-one course, that's a great foundation builder. So the link's in the description for the udemy.com course. Next, if you like today's podcast, I really would appreciate it if you could just hit the thumbs up button. It helps to build the channel, helps YouTube get the word out about the channel, and I hope it's helpful for you. I've had many people tell me that it is. So if you hit the thumbs up button, I would really, really appreciate it. And then last but not least, and most important, everyone, please try to go out, try to do something nice for someone today. It's just good karma. We all need help sometimes, and you never know when someone just needs a little bit of help. You can, help them with one little thing. It really could make their day, and hopefully one day somebody would do something for you as well. And if you could also do that for an animal, I would greatly appreciate that. Both humans and animals appreciate acts of kindness, and it's just a good thing to do, and it would just make the world a better place. So, as far as next week, we're up pretty high here. If you have some good long positions, congratulations to you, but make sure you have a trailing stop level and plan. Make sure you know the time to get out, because it wouldn't want you to have this big move up and then just ride it all the way back down. And, we are getting some resistance levels on the markets. Don't be too piggy about it. Make sure you have a plan. Maybe lock in some of those profits. When everyone's wanting to buy, it's usually a good time to sell at least part of your position. So I appreciate you spending the time here today. I hope you have a really good weekend, and hope you have a good trading week next week. If you have any questions or comments, please leave them in the comment section. I'll do my best to get to them. But once again, really appreciate you being here, everyone, and spending the time. And God willing, I will speak to you next weekend. And on the way out here, I have to run the U.S. legal disclaimer. Thanks again, everyone. Take care.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.